Hello, traders, and welcome to the weekend update here for February 23rd, 2025. Steve Gans here, sharing with you my thoughts on the market, where it's been, where it might potentially go. And last week was a little bit monumental, especially toward the latter half of the week. Now, the one thing that you will notice here that I'm doing this week that I haven't done in the past, this came from a user suggestion, and that is that I also add the QQQ. Normally, I analyze the SPX, which is the large S&P 500 index, which is mainly what I trade, and the RUT, which is the Russell 2000 index. But I thought that request was valid. So what I've actually done here is I've gone and I've exchanged the SPX index for the SPY. They move essentially the same, so there's no real difference there. Even though I trade the SPX is about 10 times the size of the SPY, and they move in sync with each other. The same is true of the Russell 2000 and the IWM. So I've swapped out the RUT, R-U-T, for IWM, and then I've added in the QQQs. So I'm going to go through those three key indexes. Now, the S&P and the Qs largely tend to move similar to each other, as we'll see, but I think it's different enough that it warrants having that alternate perspective or that additional perspective in there as well. The first thing I want everyone to notice here is that in the SPX, we see that we had rallied back to our prior all-time highs here, and then we had a big drop on Friday. Now, in last week's weekend update, you'll probably remember that I said that we were hitting that resistance area again, and it also was essentially the 50% line of this channel, and that I was favoring that we would probably get a drop. Now, breakout was another option that I considered, where we just break higher here. We started to do that on Wednesday, but then Thursday brought a little more question into the market, and then Friday was a pretty significant sell-off. A couple things with that sell-off. I did state last week that if we sold off, I would expect to sell off right to essentially where we did, with a possibility of even going a little bit lower, maybe even down to this channel, or possibly even down to this prior support resistance area here. So there could potentially be more downside coming up this next week. I will say this sell-off felt a little bit different. It was a little bit broader in scope. More things were selling off than had sold off previously. We had a pretty high volume bar here in that sell-off as well. And many times when you get that increased volume in a move, whether it's an up move or a down move, that can foretell what might be coming in the not too distant future. So right now, SPY, I'm neutral largely on it. We are still in a long-term uptrend, but it is starting to feel a little bit toppy because, again, we've hit these tops now 1, 2, 3, 4, essentially 4 or 5 times. In the past, those resistance areas, we hit them twice and then popped through. Here, we just hit it once and then popped through. So in prior areas where this has happened, we haven't bounced our heads quite as much off those all-time highs. So that's a little bit of concern. However, if we take a look at our indexes here, let me turn off my... However, if we come in and we look at the volatility on these indexes, so I go from the SPY and I look specifically at the VIX, which is the volatility index, we can see over here that it was elevated a little on Friday, but not hugely. So that's a little bit favorable for us, maybe stabilizing and or potentially bouncing. Now let's take a look at the Qs. So Qs, similar thing. I did come in, I drew some support and resistance lines. In the Q as well, of course, it did rise above the channel in a couple locations here in the past, but the channel is designed to incorporate the bulk of the movement in a symbol, not all movement necessarily. And we can see that pullback line here did come back although I wasn't reviewing this last week, but it did come back into what I might consider a support area. The main support is all the way down here. So Qs, if we continue falling, Qs can fall quite a ways here. They can drop maybe 10% before they finally start to hit some level of support. Of course, the Qs bumped their heads a second time on all-time highs as well and rolled down off of that. And we had an increased volume in the Qs as well. So again, that also foretells maybe a little bit more down potential move. But let's see what the volatility is like on the Qs. So the volatility is up a little bit in the Qs, but not hugely up yet. So again, not overly concerning right now, but the first couple days of this week are going to tell us a lot, I think. Then when we get into the IWM, again, I formally reviewed the Russell, the RUT, we can see that it also, in last week's weekend update, I said it's definitely hitting resistance here, and it was looking weaker. It wasn't making higher highs, or it wasn't even coming up and hitting that resistance area anymore. So it felt a little bit weaker, and I said if it falls, it could potentially fall out the bottom of this channel. But we do have another, what I would call, uptrending line that connects these various dots here. And it's entirely possible that it has seen its drop at this point. This green line right here is a fairly large resistance area as well, at around 215 on the IWM, which again is the symbol for the Russell Index. And if I come in and take a look at the volatility, the RVX, which is the index for the Russell, again, didn't really make higher highs. So the volatility here is actually more in a downtrending channel, which again is a positive for this thing stabilizing, maybe even starting to move its way back up a little bit. So overall, I'm definitely neutral. While we are in a long-term uptrend still in all of the main indexes, we certainly had some pretty significant concerns or some pretty significant sell-offs coming in this week, and the sell-off was broader than it's been in the past. So again, this week, what I'm looking for, I suspect we might get a little bit further down movement, maybe down to this trend line. Have to see how that holds. I think there's probably better than a 50% chance of that. Probably a 30% chance that we might rally back up here, and then we'll have to see how this is treated. I don't see that probably happening in a day, probably 2-3 days if it does. And then maybe a small percent chance that we break to a new high. But I think the chances of breaking to a new high are pretty diminished right now in our current market conditions. I think we need to see a little more what I'll call backing and filling, where the market kind of chops around down in this area, maybe a week or two, then makes another run on these highs, and then hopefully we'll pop through at that point. If we do make another run on the highs, still don't pop through to those all new highs, then I think we may be due for some potential larger down moves. If you like this sort of content, if you find this helpful, please give me a thumbs up. Please subscribe. That tells me that I'm hitting the mark here. And please always feel free to give me comments. Again, a prior viewer gave me the comment of why not add the QQQs in here. So I thought about that, looked at it, and decided, yeah, that's a good suggestion, and I added them. So please feel free to give me any feedback. I always look at all that feedback. Thanks so much for checking in here this week on February 23rd. Now, those of you that are part of the alert service, if you're not part of the alert service where I share my specific trades and you want to be part of the alert service, I'll put a link down below so that you can check that service out. I try to keep it fairly inexpensive. It's not fast trading. It is not day trading. I mainly trade butterflies. Occasionally, I will do an earnings trade or something like that in that service. I also do the wheel strategy where I am getting into long-term positions using options as my entry, or in some cases as an exit strategy. So you can see those things play out as well. Again, not active trading, probably 2-3 trades a week. You can check in on positions, maybe a few minutes a day. And I do a full video explaining how and why I'm doing each entry that I'm doing, each adjustment, and or each exit. So if you find that of interest, again, check that link out. Now, on to the current position. So I did take a little bit of a hit last week in an earnings position that I ended up closing out in Prudential Insurance. Again, earnings, I know people want to see different earnings trades, but I got to be honest, earnings trades have been pretty dicey. Many times you blow out one side or the other of your tent or your range for earnings, and that is in fact what happened with Prudential. I ended up closing that position. I think it was about a $500-$600 loss, somewhere in that range. I did trade that in larger size. When I shared that with students, I said, listen, I'm doing this in a larger size because my account can support it and I'm willing to take that risk. So rather than doing a 1 lot, I think I did a 5 lot. And that ended up being around a $500, maybe a little larger loss. Now, to the plus side, I closed out a butterfly trade, which was a typical normal class-sized butterfly trade. And that trade closed out for right about $500 in profit. But it had a chance of almost doubling that profit in the last day. And I explained via video exactly what I was going to do. There was no risk in taking that additional chance to double my return. I had structured that trade and adjusted it into a way that the worst case scenario was going to be a $500 loss. Best case scenario, if we had gapped up on Friday morning about 30 points or so in the S&P, which is totally doable and oftentimes very normal, that trade could have been closed out for about a $1,000 profit instead. Didn't work out that way, but still nice trade. And this particular trade that you're seeing right here is a similar sort of trade, this butterfly trade. And the nice thing about these butterfly trades is as our market has moved up 100 points, moved down 100 points, etc., this trade just chunks along, slowly making its profit. Unless there's some really big move, we're talking 3, 4, 5, 10%. In that scenario, this trade will initially take some heat and suffer some losses, but I use a lot of different adjustment techniques that I share in the alert service as to how I manage these when those situations occur. So right now, this trade is up about 10%. I usually like to get around 10% to 20%. In some cases, I feel I can get more out of a trade. Right now, I do feel that's the case here. I do feel that I can probably get maybe closer to around 25 to 30% out of this trade because I have this really nice sized tent area that a lot of decay can happen in yet over the next couple weeks. So that's what I'm looking for on this trade. Now, if we do get a massive market move to the downside, I'm going to have to rethink that strategy. But for right now, that's where I'm at with it. I like it. This trade, SQ, which then changed its symbol to XYZ, this one is not holding up well. This is a leap. This particular options position I bought, it expires 2 years out in the future. I did that because I felt that SQ, the symbol at the time, had very good upward potential. I am reevaluating that now. They had their earnings this last week. I did sell a call. I did what's called a poor man's covered call. So I sold a call against this leap. That call was total profit. That said, that call wasn't enough to offset the down move in the stock. The stock had been trading up here in the 90 or so range. After earnings, it sold off significantly, way more than what I and or most of the pundits were expecting that it might sell off. So this is something this week I'm going to have to think about how I want to deal with this. A couple ways of dealing with it are pull the plug, move on, find a different stock to enter as a long-term leap trade. I could also come in and start selling covered calls against my current position. If I think this sell-off maybe brought it to a point where it might stabilize and chop around a little bit, that may be the better choice. I'll be analyzing that this week and kind of making a decision on that position. Then this next position is what's called the wheel strategy. In the wheel, I'm simply selling puts, waiting to potentially get assigned the stock. It's better than me going out and putting in a buy limit order at a certain price, because by selling puts, I essentially get paid some money to put out that entry order. So why not? And in fact, at this point, I have been paid almost $4,000 as I continue to sell those puts. It's not getting put to me because the stock has ended up above my strike price each and every month I've done this. But over that process, without ever owning a single share of stock, just selling puts on this stock, I've generated $4,000 in this position. And once this decays, if the stock stays above my price here of $105, once this T0 line decays up to there, I will be up about $4,300 in this position. That's going to happen in the next 26 days. And then at that point, if it's still not assigned to me, I will close those puts. I will roll them out again and collect an additional round of premium on this position. So what's really cool about this is this lowers my cost basis. So once I do eventually get signed this stock, my cost basis in this will be, now I'm selling 2 puts when I'm selling this. So let's take that $4,000 and divide it by 2. So if I divide that by 2, let's just call that $2,000. And again, a put represents 100 shares of stock. So that means that my cost basis would be improved by $20. So in other words, if I were assigned this stock, if this thing sold off right here today, and I got assigned that stock at $105, my actual cost basis, because of the premium that I've took in over the last few months, is going to be $20 less than that, which essentially means that my cost basis is going to be $85 a share if I were to get assigned in this next round. So that's what selling these puts to get an entry into a stock is all about. It's all about lowering my cost basis. And I can do this month after month. Once I do ever get assigned in this position, then I'll take the opposite approach and I'll decide a point that I'd like to exit the position, and I'll start selling calls to exit that position. And again, I provide videos on every one of these steps all along the way. They're 3 to 5 minute videos at the time that I do each one of these changes so that people can see and learn the process in real time. Again, if you're not part of the service right now and that's of interest to you, there will be a link below. If you find this content of value, again, please subscribe, give me a thumbs up, and of course, give me any comments as well. Thanks so much, everyone. Take care.